Good morning, everybody, and welcome to Wise Tech for Wise Money, brought to you today by A1 Solutions International. I'm your host, Gary Wayne. On this podcast, we speak with entrepreneurs, investors, business leaders about their journeys, the problems they solve, and how smarter systems, technology, commercial thinking can create stronger and more valuable businesses. Today, I'm joined by Justin Sloan, founder of Sloan Capital. Justin's journey began when he was only 20 years old. He invested in everything he had into opening his first mobile phone store. He started with 9 employees, working 7 days a week, and eventually built the business into a substantial chain. He then moved into property, initially investing in residential real estate before building a commercial property portfolio and syndicating opportunities with outside investors. Today, Sloan Capital brings investors together around tangible assets, including commercial real estate and franchise businesses. The company is also developing Everbowl locations across Texas and works directly with small and mid-sized business owners on operations, funding systems, and growth strategy. Underlying all this is Justin's belief that the world is a better place when more people own a piece of it and success is shared rather than guarded. Hi Justin, welcome to the show. Wise Tech for Wise Money. It's really good to have you here.
Thank you so much, and thank you for that intro, sir.
Yeah, it was quite detailed, wasn't it? But I think I covered everything.
I'm looking forward to diving deep into it.
When we first spoke, you told me that while you were still in high school, you were selling mobile phones to your local shopping mall. Where did that entrepreneurial drive originally come from? Give me a little bit of a background, to how it all started with your single mother, 3 boys in the family, and you learned that you had to earn money. How did that shape your attitude?
Yeah, you hit the head on it, right? So my mom, single mom, 3 boys, and she was scrappy. She would always have kind of 6 or 7 little side gigs, whether it was delivering newspapers or waiting tables or selling Avon or this or whatever she could, because you gotta pay those bills and do their best. But as my brothers and I got a little bit older, those expenses get more, and we're eating more, and we want new clothes, and we want those certain things, and so we all had to kind of figure out how to go make our own money. And so in high school, I was actually working at a local Radio Shack and, selling, little, tidbit things here and there. And that's right when cell phones were starting to get pretty popular, and ended up going to work directly for a cell phone company while being a senior in high school. And fortunately had a kind of easy schedule at school. My senior year was done most days by noon or 1 o'clock. And I'd head straight to the mall and work there till 9 p.m. and fell in love with commission. And eating what you kill, and the more that you sell, the harder that you work, the more money that you can make. And my mom taught me how to work really, really hard, but she didn't necessarily teach me how to work really smart. And so when you learn commission and sales and this, and you can work hard and smart, put those 2 things together, and some beautiful things started happening.
So you progressed from selling phones to managing 1 store and then several stores at a very young age. That's quite a meteoric rise. Tell me about it.
Yeah, well, somewhat being right place at right time, but also I think just that hustle culture. Kind of a funny story, after I had worked there for only a couple weeks, about half of the team got fired for stealing. And there was this, prepay cell phone way that they were figuring out a way to skim some here and there. And so within literally a couple weeks, I was working 50, 60 hours a week and covering every shift that I could and taking on any responsibility that they gave me. And actually the first year that I was there, I was 18 years old and I was the #1 salesperson in the company, won a free trip to Cancun, with the executive team, and started making friends and relationships and, just doing the things that I said I would do. And then they ultimately put me in charge of 1 store, where then I took those skills that I had and helped, make everyone around me just as good. And all of a sudden we're growing sales and winning, and hey, another opportunity, a store leader left in another store and they said, hey, do you want to take this one over too? Absolutely. And just continued to, drink out of a fire hose and say yes and figure it out. And again, go back to working hard and figuring out how to work smart at the same time and start developing some of those systems.
So, I mean, when did you actually first buy your first own store?
I was 21, almost 22 years old when I took everything that I had made over those last few years and decided to open my own cell phone resale store of the same company, but in a different part of town where they did not have any stores. And, I basically took everything that I knew and designed the store, bought some cheap cabinets online, painted. I still remember putting up the walls and painting it myself and everything that I could do to be as scrappy as possible. And then add a few things that they didn't do at some of the corporate stores, more accessories, some tech work where we'd replace broken screens or broken charger ports, things. And all of a sudden, other stores started sending their customers over to me. And, I'd take really good care of them. And before you know it, after a few months, I was open to close 7 days a week. I was the only employee. But I needed to make sure that I paid myself back and I built something before I started going crazy hiring people. And fortunately, that happened within a few months and, started building a team and expanding from there.
Was you scared when you started?
I'm one of those people where there's always a little bit of fear, but, I think that the fear for me is not doing something, and being in that same place and doing the same thing forever and knowing what those results would be, that to me is a little bit scary. But, when you know the business, you know the numbers, you put together the business model, now it's just a matter of going and executing it. And that's something where I look at so many businesses and properties and investments and all that kind of stuff that when that sweet deal goes across your plate, you really want to take a swing at it. And I think from a young age, I really understood the cell phone world. The commissions were really good. I thought my chances of being successful were very high. And, it definitely, was kind of scary to leave having insurance and having a salary and, all of that kind of stuff. But, I kind of realized at that point my position had capped itself out. The odds of being, district over an entire state or, much higher than that at such a young age was probably unlikely. And so if, especially at a young age, that's when you should take some of those swings because, even if you fall on your feet, you got all these, decades and decades more to rebuild. And fortunately, I always say thank you, previous Justin, for decisions made in the past and realizing that I'm living right now because of decisions made, 5, 10, 20 years ago. And in the future, 20 years from right now, I'm going to be living based on decisions that I'm making right now.
As your business expanded, obviously you had to transform from a salesperson to a manager, a leader, a business owner. How did you manage that transition without any training?
Yeah, well, I think I got a good amount of training when I worked at corporate. Naturally they'd send us to different, things or I'd speak with other leaders. And, a lot of what I do is I just try and network with people that are smarter than me, that have already done this before. And, you can learn a lot of different things from a lot of different people and ultimately develop your own style. But one thing that I've just been, really focused on my entire career is making everyone around me the best that they possibly can. And, I'm very proud that a lot of people that, I would say the vast, vast majority of people that have ever worked with me have then gone on to do even better and greater things. And, and then we bring in people and, spot some talent, help them, dial it in and polish them up. And all of a sudden they're taking care of your guests and doing that. And I think when you're in the weeds with your team and working shoulder to shoulder with them and showing them the processes, showing them the way, setting that example, that it makes it that much easier to manage them because they trust that you know what you're doing because you're willing to do the same job and the same process that you are. I know a lot of businesses where, the owner may be not remotely involved, but all of a sudden making all these decisions and choices without talking to the team members that are involved. And that becomes very, very difficult. So I've always chosen whatever business that I'm actively in, I'm going to be very actively in. And I don't mean micromanaging every little thing, but I mean understanding the levers that move those businesses so that you can then make the adjustments that are needed and talk with the other stakeholders that are part of it to understand what adjustments they think are needed and collectively come up with the best decisions to move the company forward.
When you obviously had that company, you started scaling, you didn't use any real debt. How did you plan all that?
Yeah, so I would say I used a little bit of debt. Like I remember my second location was in a mall. It was actually a few hours away from my first location. We needed to build, a really fancy, nice looking kiosk, with nice signage and good displays, security for storing. Obviously, we had lots of inventory of phones and all that kind of stuff. I think I maybe took out a $20,000 loan, over the course of maybe 3 years or something. So the payment was a whole $700-800 a month, nothing crazy. But yeah, no outside money, nothing. And again, then using all dollars that I made to pay that down as fast as I could. And I've always been one of those people where want to be really cautious with the amount of debt that you take and the amount of overhead, because I've seen so many businesses get in trouble. And then with that money that you're spending, how do you use it in the absolute best way possible? I remember really early in life, like I was 16 years old, working for this little small business, and it was struggling. And the owner went out and bought like an $8,000 copy machine. We might make 3 copies of things a week. Why in the world are you spending so much money on a crazy printer and this fancy thing, whatever? And instead, where else could that money have gone to help the business be more successful in other ways? And so I think there's a lot of value in, running lean. And, as you scale and you really need those tools, sure, get them. But instead, when you're starting up, you got to pay attention to every single dollar, what your overhead is, and know that the first 90 or 180 days are probably not going to go the way you thought they were. And so you better have a bunch of contingency plans in there and be ready to be a chameleon and change your path. And the last thing that you want is a lot of overhead and debt. And I work with a lot of restaurateurs now and different franchise owners. And, it's very easy to get debt for some of these, but just because it's easy doesn't mean it's a good idea.
Yeah, no, you're right. So when you started to exit the mobile business, what did you see change that made you realize it was time to get out and move elsewhere?
Yeah, so I worked for a small kind of regional carrier, and they had a big roaming agreement with a big national company, so that we kind of took care of the customers in our state, kind of state and a half, and then partner with them on the other 48 and a half states. And the company started to get in some trouble. They weren't, upgrading towers as fast as they could. We weren't able to get 5G and LTE, so Apple wouldn't sell us the iPhone. Starting to lose some customers and starting to kind of go backwards. And with that, they started naturally cutting commissions from the front lines. And so the writing started to be on the roll, writing on the wall a few years ahead of time. That's actually when I started getting into real estate. I kind of decided, hey, I don't want to go spend any more money opening more stores. But I've got some stores, they're profitable, we have a system. Now, where can we start taking some of this income and diversifying? And that's where I fell in love with real estate. And, I go flip a house on the weekends or nights and go paint and this and, learn that business slowly while also still running the business that was paying my bills and allowing me to invest in other things. And, I got bit by that real estate bug and, it went wild.
Did you sell the chain of mobile shops or?
Yeah, I sold a couple of the stores. We did close one of the stores. And actually by that point, I owned a strip mall with one of my own stores in it. And I gave the store to corporate in return for a 5-year lease at market rent. So I actually added a couple $100,000 in value to the building and had a corporate guarantee on a lease. Because they didn't want to see that store go, and I didn't, I was ready to be done, and that was a really good transition. So there was, lots of different moving pieces, and you look at each store individually and their value and other ways to create, value from it. But at that point, it was time to be done for sure.
You said that you effectively retired at 32. Did you actually retire or just sort of take a lower profile?
No, I mean, I literally was golfing 6-7 days a week, relaxing. I'd buy a property, but at that point, I had contractors that would go do all the work and stuff, and maybe one day every couple weeks go check on it. I had property manager that managed all of it. So I mean, there was still a little bit of actively managing the investments, but actually going to do the day-to-day work, that was all done for a period of a few years. And I'm very open about it. I think I told you this when we talked before. I hated it. I mean, I lived right across the
Did you get your
street.
golf score? Did you get your golf down?
No, I realized I'm not near as good at golf, no matter how hard I try as business. But on top of that, I always make the joke that, getting a birdie or making a big 30-foot putt or this or whatever it is, yeah, that's exciting. But let me tell you, the business world is a lot more exciting. And sitting in boardrooms with really interesting people and watching companies grow and watching people grow. And sometimes that golf retirement life, I always make the analogy of it's kind of like It's a Small World at Disneyland, and you go around this loop and it's just singing the same song over and over. And now 20 years later, you can go back to Disney and guess what? When you go on the ride, it's the exact same ride over and over. And that's kind of how I felt about golf when you're golfing that much. Every day is kind of the same thing. It's kind of the same jokes. It's, kind of the same environment. And after a period of time, it wore off a little on me. And now when I go back and golf, it's much more of a hobby and much more fun and, rare. So I enjoy it so much more than when it was something that I was doing all day, every single day. And I think that a lot of people go through that when they hit retirement is, just this kind of It's a Small World recurring type of thing. And that's not what I wanted for sure.
So how did you then move into real estate on a full-time basis?
Honestly, I got to the point where my real estate was making a whole lot more than my cell phone stores were. At one point I started buying a house about every single month, a bunch of fourplex apartments and little apartment buildings. I then started getting into strip malls and, absolute triple net. And I just got to the point where, the cell phone world, again, the company continued to make some pretty bad decisions for several years. And again, the writing was on the wall that they were going to be bought or closed or merged or whatever. And I didn't really want to be there holding the bag at the end. And so ultimately made the decision that it's time to sell what we can, exit what we can, again, do a lease to help, provide value to another property, and essentially sit back with mailbox money and coast it out for a little bit of time. I really thought it was going to be a lot of bit of time, but that's just, I can't do it and I won't do it ever again.
So what was the next stage from that?
Yeah, so for the next few years, while I was kind of, like I said, I was golfing and this and, would still obsessively read and learn about business, network with different people. And then I started to, invest into some small different companies and, put some dollars to work. At that same time period, I started having people come to me and say, hey, you own a lot of properties. Can I buy one with you? Like all of a sudden a best friend or a relative or this or whatever. And for the first couple of years, I said, absolutely not. I don't want investors. I don't want to deal with this. This is all fine. But one day you say yes and realize, hey, this is actually a win-win for both people. And then you say yes again. And before you know it, they start referring a couple other people to you. And we ended up building a small little syndicate that would go out there. And I put my money as well as investor dollars into every deal. So my money's right alongside of theirs. And investors have always liked that because I know a lot of people just want to take the outside money and, not necessarily have the real skin in the game. But every property, every restaurant, every deal that we do, every company we invest into, I'm doing the exact same. And essentially just kind of took my weird brain and the things that I'm doing and allowed me to do more of it and at a different scale. And the results were very good and continue to be very good. And with that, the best way to get more investors and more investments is to win for the current people that you're doing business for. And I really truly believe in taking care of those people that trusted me with their dollars and treating them well, giving them more updates than they probably ever want or need. But again, as I invest into a lot of different companies, and sometimes you don't get any updates or maybe one a year or something, I think that investors are owed more respect than that and should be treated better than that. And that's the path that I've taken.
Yeah, no, I agree. So they started off with, like as a JV partner. How did you make the transition from JV partners to syndicated deals? And how did the JV partners flip over into the syndicated deals? Because obviously you
Yeah.
had to move them over.
Well, no, yeah. So, I mean, for the real estate investments, we would do one or two properties at a time, and I would kind of tee up the deals and go to a small group of people that I knew were ready to invest when the time was right, and we'd drop a simple LLC and partnership agreement, and that was that. Where things got, interesting and where it switched into a little bit more of a fund is when I got into the restaurant space. And, at that point, so this is, the middle of COVID, and, I was investing in different companies, and I found a franchise concept that I really liked, and I was investing into it at a corporate level, but also decided that I think I want to own some of the stores and kind of take the last 15 years of experience of my life and be able to combine it all together. I knew repeatable businesses from the cell phone world. And at this point, my knowledge of real estate was 10x what it was, 100x what it was when I started my first cell phone store. And a lot of business is signing the right leases and, making sure they're structured correctly and they're good locations and, landlord friendly and tenant friendly deals, and essentially take that whole box of knowledge I had. And, I opened the first restaurant myself and I proved out. And then the next two, I went to just a couple people that had done a lot of deals with us and, started that. And within about 18, 24 months, we really had a proven track record. And then I basically, went to my network and opened up the door and showed everybody what we were doing, what we were getting ready to do, and funded the next 6 restaurants in one night, just from hosting a little event.
So, your restaurant business, how would you classify it? I presume you own the freeholds for them.
Yeah, so I own at least 60% of every one of the restaurants. And again, I put my money in right alongside everybody else. But we own the locations itself. It is a franchise, so we're part of a larger system.
But would you call it a property business or a restaurant business?
It's definitely a restaurant business. We don't buy the buildings that we're in. But there's a lot of the, real estate and construction aspect that goes along with it. And, we're able to open these restaurants for less than $400,000 a piece, and we do so debt free. And so with that, we don't have to worry about interest rates or this. And again, I know the leases, they're structured right, they're in the right locations, etc. We know the average unit volumes, and we can use technology to help us, predict what volumes will be at different locations. And then essentially it's taking that exact same box and stamping it in different areas. And I used that exact same strategy when I got into real estate. 3-bed, 1-bath slab homes with no basements were my bread and butter. And what people didn't know was every one of those houses had the same paint color, the same cabinets, the same tile, the same carpet, the same trim, the same doors. And I had a workshop out on the edge of town that just, I'd see the doors go on sale for 50% off, and I'd go buy 30 of them. They had the same washing machines, the same stoves. And so everything was plug and play. Sometimes I'd own multiple houses on the same streets and the tenants wouldn't even know it, And, taking that same idea of the restaurant world and saying, hey, listen, same counter line, same fridges, same freezer, same menu, same cost of goods, same labor model. Now we just got to find the right locations with the right rent. We know the construction process going in. 80% of our business is now figured out. There's always some variables, what's competitive analysis, what does the competitive landscape look like, seasonality of different areas, affluence of different areas, all of those kind of things. But when hey, here's the revenue that we're doing, here's exactly what our cost of goods and our labor and our rent will be at every single store. Now all of a sudden, even if you put some variance on there, and at the restaurant level, if we profit only $5,000 a month per restaurant, 60 grand a year, well, on a 400K investment, that's 15% a year. So our investors can make really nice cash on cash with great depreciation and be part of a system that now we've done over 100 times across the country.
That's amazing. So are you still doing commercial property?
Yeah.
So you're doing both. You're doing commercial property and you're doing obviously the restaurant business.
Yeah, I don't see myself ever getting out of real estate. It is, again, real estate just flows through my veins right now. I definitely don't think real estate is as interesting right now as it was a few years ago. A few years ago when everyone was buying everything at crazy high prices because interest rates were quite cheap, we actually liquidated a bunch of our deals. And, we ended up, sometimes held a property for only 2 or 3 years. We're expecting to hold it for 7 or 8, and we got our investors' returns that, we would have never dreamed of in that short period. And I'm all about, Moneyball. Get some doubles and triples and singles. We don't always have to swing for the home runs. And where I think a lot of people got in trouble is they swung for home runs when interest rates were crazy cheap and they paid too much for properties. So right now we're starting to see we're hitting that 5-year mark where now commercial loans are coming due and people's rates are going from 2.5% or 3% to 6.5%. Well, maybe that deal doesn't cash flow the way it did before and or appraise the way it did before. And so we're able to buy things at cap rates we haven't seen in years. And I think it's just getting started personally. So always looking at those kind of deals, looking at those options, but being very, very smart and very, very diligent. We don't have, unlimited dollars that we have to go spend or hundreds of millions we have to go spend. We can do a couple deals every single year. And I've always loved the, Warren Buffett analogy that we play in a game that there's no strikes called. I can stand at the mound and see as many pitches as I want, properties, businesses, opportunities, this, and I never have to swing unless those things are perfectly in my sweet spot, coming right down the middle at a nice speed that I know I can absolutely just crank the hell out of it. And that's what I do. I sit back, I position myself intentionally to see a lot of deals and make sure they're coming across my desk, and then I only swing when it's right in our sweet spot and we know we can win.
You said the property market changed a lot recently and it wasn't as interesting as it was a few years ago, although you just now said there was opportunity, but it's only just started, but it looks quite phenomenal. What is the difference between a few years ago and now that's different to you and opportunity-wise and success-wise for people?
Yeah, so let's take a look at like an apartment building from 5 years ago, right? Let's say somebody buys the apartment building and maybe they can get debt on it at 3%. So they're okay buying it at a 5 cap rate because they get a 2% spread there. And, they're paying more for the property than they should, but ultimately they're getting a spread, they're getting cash flow, all that kind of good stuff, right? Well, the second they buy that property for quite a lot more than maybe it was worth before, guess what? The appraised value of that property shot up quite a bit, which means your property taxes go up. We also have had insurance go up through the roof, regulation go up through the roof, maintenance and construction costs have gone up through the roof. And on apartment buildings, you can't just pass all of that along to tenants. And so, your NOIs probably have not changed all that much or not as much as you were hoping. But now all of a sudden we're hitting year 5 and interest rates are 6%, let's say. Well, if you still want that same spread on that same apartment building, that means you need to buy it at an 8 cap. Well, maybe they're still, maybe they're getting them at a 6.5 cap. They think they can do some rent, refurbing and this and get some rents up or whatever. But if you buy a property at a 5 cap and it goes to being a 6.5 cap when it's appraised, people don't realize you just lost 25% of the building value right there. So if you only put down 20% on the property, and maybe over the last 5 years you paid down another 5 or 10%, well, when you go to, let's say it's a $10 million property, now all of a sudden it's only worth $7.5 million, or the bank is only going to give a loan at a value of 7.5. You might owe 7 on it, but guess what? The bank wants, at least 25% down, meaning you can only take out a loan of $6 million, but you've got a loan on it for $7 million. And I'm seeing that happen a lot of places. I know of some big syndicators that got in way over their skis and bought things because they had a lot of free money and, had investors that trusted them, and they were on the right path ahead of time and decided they're just going to keep doubling and doubling and doubling and buying more and buying more. And now all of a sudden, these properties are coming due for renewal and they're getting new appraisals on them. and realizing that nobody's buying properties at 4 and 5 caps right now when interest rates are 6%. If you want to get that kind of return, just go put it in the bond market where you don't have to think about it. You don't have to go fix any leaky toilets or worry about what, strike of a pen is going to change regulation. And I think it's happening all over the place. And I think, especially over the next 8-10 months, when a lot more loans are coming due, we're now seeing more and more properties come to the market. Well, when more, for the longest time, there was no deals out there, and the ones that were, people were way overpaying for. Now, supply and demand is flipping the other way. And I'm seeing, more properties hit the market because people need to sell them because their interest rates doubled, or it didn't perform the way they did, or maybe the bank is, all of a sudden coming and saying, hey, if you want to keep this property, you need to put another $1 million into it. Well, that's a really tough conversation to have to go to your investors for.
So what do you think is going to happen? Property market collapse or just gradual sell-off?
I think a lot of it will depend on interest rates and how long they take to come down and, manage and things along the lines of that. I think we're just in a really weird holding pattern here where I don't think a lot of things are going to happen one way or the other. There is some sectors of our country that are still doing absolutely insane. I'm from a part of the country where they're building data centers all over the place. Well, those data center workers need places to live. They're filling up apartment buildings and rental houses and this and everything else. But if you look at actually properties that are being sold, there's more and more coming on the market. They're sitting for longer. And the average person can't just sell their home and move next door and buy the same house. Imagine you live in California where your home was $1 million and you got a 3% interest rate on it. Now they're telling you it's worth $2 million. So to buy your neighbor's house is $2 million, but your interest rate's 6% on it. And your holding costs could go up by $4,000, $5,000, $6,000 a month just to move next door. And so I think that what's happening is people are just in the residential sector, they're kind of stuck. And until rates start coming down and or property values start coming down, we're going to be in this holding period. And every city, every state, every municipality, they're all different. But in the commercial world, I think that people are realizing that on investment properties, they need to get a higher return than probably what they penciled 5 years ago, because they didn't necessarily factor in the massive change of interest rates that could happen, the massive rates of increase of property taxes, insurance, maintenance, things like that. They need to give themselves some buffer. We've talked about just regulations in different areas that make it harder, when you do have a bad tenant that might not be paying and what it takes to replace that tenant. So now maybe you had a 3 or 4% vacancy factor, in your pro forma, and now all of a sudden you got to change it to a 6 or 7% pro forma. Well, those are real number changes to the ultimate thing of the property, and it's going to be interesting how it plays out. I hate to give crazy predictions. I like to look at all these data points of things that I know are happening right now, and I know a lot of bankers, I know a lot of investors, I know a lot of syndicators, and I hear the pains that they're in and the good pieces that they're in and where they're picking up the pieces. And, somebody that I know and trust that's been doing this for 40, 50 years now, he says this is harder right now than it was in '08. And his reason was that in '08, it happened fast. By 2010, 2011, things were kind of on the other side of it. So if you could figure out how to make it through that couple year period, you're doing just fine. And then all of a sudden interest rates were cheap again and you could refi back out and, go on with our days. And it was kind of straight up and to the right from there. But right now, we're at year 5, maybe 6, depending how you look at it, of raising rates and tougher environments, and building new buildings are very expensive. And then the lease rates on those have to be very expensive, which then puts a lot of pressure on the tenants in there to do levels of business maybe they're not, ready to do or able to do to pay those rents. And, I'm just a really big believer that right now the biggest thing that we can do in the United States of America, at least, and honestly probably everywhere, is we need the everyday human to do better. And, when interest rates were lower, the everyday human had a lower payment on their car, a lower payment on their house, which gave them more money to go out to my restaurants and visit my buildings and spend money with my tenants that then helped their businesses do better. And I'm a big believer that the better that the everyday person does, the more that it trickles up to those of us that, get little pieces of the economy up above that.
Yeah, no, it makes sense. You mentioned when we spoke that Sloan Capital's philosophy is that people should have the opportunity to own bits and pieces of real businesses and real assets. Why is ownership so important to you?
I mean, again, I think maybe it's coming back from, raised as a single mom where you look out and there's this whole big world out there and you don't really feel part of it. And I think a lot of people right now, they feel that way. And we know they feel that way based on political things that are changing and all of this sort of stuff. But I just truly, truly believe in my heart of hearts that the world is a better place when we all own little bits and pieces of it. Right? When you drive by a building and you're like, hey, I own 1 or 2% of that. And hey, that restaurant over there, I'm part of that. Or I invest in this company. I go walk through the, Target and I look on the shelves and there's companies that I invested with 5 years ago that weren't ever in Target. Now all of a sudden they're on the top shelf, and doing really well. And then with that, they've created a lot of jobs. They've created a lot of opportunities. They're products that people want and need and like, and businesses that people love to go to. Our investors have helped create hundreds of jobs and help businesses and help properties make the world look better. And everybody has their own little piece of it. Some people own 1%, some people own 30%, and it's so fun when I send out these investor updates and they get so excited and they realize what we're compounding and building together. And I'm planning on doing this for another 20 years, at least, probably more like 30 or 40. And the reality is, think about, I'm a big believer in compound interest. Think about how this keeps compounding and the impact that we can have and how many more people that we can make part of this world, not just, one of the players in the world, but actually somebody that's an owner.
For someone encountering Sloan Capital today, what are the opportunities they'll come across with you?
Yeah, so right now we just opened up a restaurant fund a few months ago that has a little bit left in it. And then I think the next piece from there, we're now starting to get into some of the family office conversations and things like that. But there's always going to be a place for me for individual investors. I don't want to just go to the family office or the crazy high net worth level. But I think what we're probably going to do here in the next couple years is do more like a fund of funds type of offering, where essentially rather than just a restaurant or just a piece of real estate or just a company, we're going to kind of loop it all into one. And I'm going to put a big chunk of capital in there, and the opportunities that then I'm just investing in, we'll just do it at a bigger level. And all of a sudden, rather than people being segmented into just real estate or just restaurants or just a private investment company that we do or whatever, and all of these kind of being one off, because it's a lot to manage, Gary. Just brutal honesty is, when we've got 25 LLCs, all with lots of different stakeholders and things like that, I think the next logical step is to do one, bigger size fund. And again, then with that, for investors, they can have pieces of lots of different things under one fund and take this crazy brain of mine that sees all these opportunities and sees all these pitches and essentially just take a few swings at different ones and see where we can do with it.
Would you then diversify and invest capital in other funds and,
yes,
et cetera, and sort of spread out, in different directions?
Absolutely. I more prefer to invest directly into companies than invest in funds that invest in those companies, because I want to be really careful with fees as well for our investors. I've never been a really big fee guy. I think so many things with investments and mutual funds and all these kind of things. And so when I know a lot of these owners and I know a lot of these founders and people that are building these great companies, then those opportunities come across my desk and we can negotiate those deals sometimes a little bit more favorably and make sure that their returns don't get eaten up. And, you buy a mutual fund and you're paying your financial advisor a fee, but the mutual funds are also getting a fee. And, who knows inside of there who else is getting a fee. That can really dilute that ROI to your investor. So, not saying I'm not against it. We definitely want to invest with others that are doing great things. but I much prefer to try and find companies or businesses or real small funds where they have the kind of the same mindset that I do. And we've had other funds that have invested in us, and it makes sense that if we're swinging in an area that they're not, and they're swinging in an area that we're not, and both of them are interesting and have upside, why not?
So you're invested in more than 20 businesses. I mean, how do you choose the businesses to invest?
Well, I love the analogy of I don't want to help you be the rocket. I want to help you be the fuel for your rocket. Okay? So when I'm looking at companies, I'm looking at something that's already got some traction, something that's already kind of moving, and they need capital to get to that next phase. I have invested in a lot of startups, and with that, there's high risk, high reward. And some of them have done really, really well, and there are many that are no longer in existence today. And that's part of that game. But my success record happens a lot more with companies that are, hey, we're doing X amount in revenue. Here's where we need the dollars to get to this next stage. And so that's my sweet spot, is working with founders and working, with businesses and just in my network itself. I'm really big into networking and business. I throw a lot of networking events, and, I find these people and individuals all over the country that are doing very interesting things and things that I believe in. I also am like, I play in a really specific field, right? If you tell me about some crazy arbitrage technology thing off of, and who knows what I don't remotely understand it, I'm not going to invest into it, right? You tell me about a consumer, product good that is getting ready to, that's already been picked up by a couple national retailers, and now they're getting ready to go to 2,000 more stores, and the founders have had 2 previous exits, and that, I'm telling you about a company that I invested into a couple years ago that's already, many times returned its dollars and then some, because when you know the people, the leaders, their background experience, the world they're playing in, and you can just go there to be the fuel for their rocket. Boy, that's where I really like to play. I don't like to help people figure out the thing for the first time. Just like I wouldn't expect my investors to be the money to figure out things for me for the first time. It's why I opened my first couple restaurants myself and with just a couple people before we actually opened it up, and made sure it was really clear that it's risky when it's your first starting and there's a lot of unknowns. But then once you get that track record and you've done it half a dozen times, okay, now it makes a lot more sense to open it up to others and start taking the dollars.
How do you manage all this? Do you have a big team?
We have a decent sized team, but again, I'm an analogy guy, so I love the analogy of it's like juggling. You start with 2 balls, then 3, then 4. By the time you get to 15, you're just adding in one more, and everything for me is systemized. I'm a huge systems guy, from how we find the investors, how we fund it, how we open the locations, how we communicate with them, how we report it, and then obviously have a lot of people that run our businesses, run our restaurants, accounting teams, how they give us reports, when they give us reports, and holding everyone to a certain standard to make sure that they realize we're doing it all this way because we have a lot of people that count on us. Not only just our investors, but our team members that work in these businesses and it's up to us to be very systemized with all of it, because that's how you scale. If I do everything different, when there's problems, I've got to figure out weird solutions to all of these problems. When you do everything systemized, when the system breaks, it's really easy for me to see where it breaks and go fix it. And I'm such a believer, and I sleep so much better at night than by doing everything the same way and very consistently, that, there's not a lot of, again, trying to figure out things for the first time. It's more like, imagine an engine in a car. Hey, it's making a loud popping noise. Well, you better check the spark plug, right? And, okay, that's good to go. Well, no, this little thing over here isn't quite as tuned over. Well, we know how to fix that. And that's exactly how I look at our businesses, is they're all just a bunch of little engines. My job is to keep those engines as fine-tuned and figure out how to bolt on other things onto those engines to get them as fast going as they possibly can.
You've now branched out into consulting. Tell me about that. How does that run?
Say that again.
Consulting. You started consulting on mid-sized
Yeah.
businesses? So tell
Yeah.
me about
So,
that part of the company.
you know, it's honestly something I do just because I absolutely love it. And opportunity. You get phone calls here and there, or people reach out on social or whatever, or you make a post that all of a sudden triggers somebody's mind or asks some questions. And I just kind of decided to, just take a few hours every week and dive into these different individuals and businesses and help wherever I possibly can. And I'll flat out tell people if I don't think I can help them. But especially like in the restaurant world, there's a lot of restaurateurs that are great chefs, but they maybe not are great business people. They don't understand P&Ls, they don't understand, leases and real estate and these kind of things. And, they could make the best pork belly, whatever dish that you've ever tasted in your life, but they don't necessarily know how to make money with it or at scale or running these operations. It's why you see so many places close. And so ultimately, I've just had a lot of people over the years that raise their hand a little here and there and help them, whether maybe it's one phone call, maybe it's 6 months, it's never meant to be an indefinite type of thing. But naturally, what happens with it is kind of like the investor thing. When you do the right things for people, then all of a sudden they know 2 or 3 other people that they introduce you to and they introduce you to. And then honestly, I bolt them into my team. Hey, talk with my accounting person. She needs to help you understand how to get your QuickBooks in order. Talk with this person. They need to help you with marketing and this and all these other kind of things. Maybe I'm not the right person, but I refer off a ton of these people as well that need help in different areas. And then naturally they refer them back to me too.
So how do you charge for all that? Or are you looking to take a slice of equity, or how does it all work?
Everything's a little bit different. I recently had a deal where a guy I've known forever and ever, he was looking at buying a few restaurants, a big franchise company that does very, very well, $1 million plus per unit. And he brought me the deal that was brought to him by a business broker. And in a very short period of time, I saved him well over 6 figures on the purchase. And I mean like well over 6 figures. And I woke up and again, I was kind of doing it almost like, again, I've known the guy forever, great guy, great family, happy to just take a look at it for a few minutes. And ultimately woke up and he gave me a few percent ownership of all the restaurants. He's like, hey, I need you to sign this paperwork. Just want to let you know, like, if you can help me this much before I even buy the business, how much can you do even afterwards? And so, a lot of times it's just an hourly deal or a flat fee. It really depends on the business and where they're at and all that kind of good stuff. But, it's that part of my business is not about how profitable I can be or how much equity I can go get from these companies or whatever it might be. It's more of there's no school or college or anything out there in the world that teaches a lot of the things that I've learned over the last 20 some years of building these businesses and making a lot of mistakes and going through it. And if there's ways that I can help other people not go through some of the same things that I've been through and I've watched others go through, that kind of goes along with the same premise of, the world's a better place when we all own bits and pieces. The world's also a better place if we help those around us and help your neighbors and friends and help other people try and be as successful as they can. And I'm a huge believer that this world is so big. If you win, Gary, it does not hurt me in any way, shape, or form. And if I win, it doesn't hurt you. But if we both win, boy, that's a lot more fun. And when I get to the end of this game, I don't want to be on the top of a mountain by myself. That doesn't sound like very much fun either. So how many people can I get on those mountains with me? With it, how many ways can we win different, things? Now, how many trips can we go on all together where we're sitting around a pool and having crazy business conversations and walking through these different things of all these ways that we've won and figuring out problems? And I'm part of networking groups where you literally show up and you tell a group of 10 people exactly what the biggest problem is in your business, and everyone else just pours into you trying to help you figure out that problem so you can go back to doing the other things. And imagine the whole world was like that. It excites me if you can't tell.
Yeah, I mean, the world will be a different place. When you look 5 years ahead, what do you want Sloan Capital to become?
Again, I think the next phase of it's going to be like a fun-to-fun type of thing where we open it up a little bit more to more people, more opportunities, doing more things, and ultimately taking the team that I have right now and just continuing to give them opportunities and let them shine and do amazing things And, with that, I have some charitable goals and things that are important to me for, the way I see the world and see opportunities that need help. And I think continuing to just do the right thing. I'm very big on not shiny light syndrome. I think a lot of investors and entrepreneurs get shiny light and kind of go, oh, this is interesting, I'm going to go over here. And oh, this is interesting over here. And for me, it's on continuing to build and compound the things that I know work, I know win for our investors. And now how do we take it to the next level to win for more people, more companies, help more founders, buy more real estate, open more businesses, and just do the same things that are in my sweet spot, but we're just going to do it at a bigger level.
So if you're a guy starting out, hadn't had the mobile phone business, which obviously you built from scratch, and how would you start today?
I'd get crazy into AI, first of all. I think that if tomorrow I could go start a business, because we use AI a lot with a lot of our businesses and automating and, optimizing different things. And there's a lot of businesses out there that do not know how to add these tools to their businesses. And so if you can quickly learn, and with AI, it can become your own teacher, and you can learn these things very, very fast and go help other businesses add some of these tools to theirs. I think you could create extreme amounts of recurring income in a very short period of time, and do so in a way that's actually making every business that you're helping better. You think about the mom and pop plumber or HVAC business or this or whatever, and putting in a couple different tools to help them optimize their scheduling or ordering or inventory or this or, phone systems or whatever it might be. All of a sudden you could be helping dozens of businesses, providing them a lot of value and bringing in a nice amount of recurring income for yourself, and then again, I'm a big believer that you find that core thing. If I was to start over tomorrow at zero, I would find the core thing that I could figure out how to get a great return, a great income, and then live under my means. It's another one of my core values here is, regardless of what level I get to, my lifestyle does not change all that much. I don't need the planes. I don't need the crazy fancy cars. I don't need all that kind of stuff. I love to take that extra dollars and go invest it into other things. And so if I was to start over again at 20 years old right now, I'd find one thing that I could go make as much, help as many people, build my network, because I know that's something that you can monetize for the rest of your life. And then with all of my extra dollars, I'd be starting to invest in little things to learn and be part of and continue to grow that way.
I've got to say, great podcast, great story. I've
Appreciate
really enjoyed it. I can't go, you're just a genius entrepreneur, aren't you?
Not according to my high school report card, but no, I don't know, man. This to me is fun, and it's interesting, and I still have so much to learn, but wow, have I already learned so much. You can see all the books behind me, and love to read. I love to read people's stories. I love to meet people like you that are doing interesting things and have conversations and, really just live life in a way that this game of life is really long. And this game of life has a lot of chapters to it. And sometimes those chapters aren't the most fun, and sometimes they're really fun. But we have to remember there's going to be more chapters. And so I would just say, and I said it kind of earlier in the podcast, like I thank previous Justin for decisions that I made many, many years ago. And I know for a fact I'm going to, 20 years from now, have to look back on the decisions I'm making. So let's all just make really good, the best decisions that we can every day. Treat people the way that you really want to be treated. I'm an old Boy Scout, right? You leave the campsite better than you found it. And if everything that we do, and we surround ourselves with those kind of people as well, then really beautiful things happen. And I think that we can all make our own difference in our own way and help other people that are doing that as well compound and ultimately create a world where people own more bits and pieces and they're more part of this world. And I think that's a great place to live and a great world we could all be happy with.
I think that's a great message, Justin. For people who want to learn more about you and your business, how can they get hold of you?
Yeah, so I do the social media thing. You can find me on LinkedIn, Justin Sloan, or my website, sloan-capital.com. You can literally just schedule a time if you want to chat. And, again, not a consulting thing or this, or there's no cost to it. I just put a link right on there and you can grab a time off my calendar. And I believe in meeting new people as much as I can. So find me on social or reach out and connect with me.
All right, Justin. Well, thanks very much. It's been a really good podcast. It's been a pleasure talking to you again. I want to thank the listeners for listening in. I'm Gary Wayne, A1 Solutions. Justin, thanks for being my guest, and we'll be back in the next couple of days, hopefully with another podcast. But it's been really enlightening, and I think the most impressive thing for me is not just your success. I think it's your attitude. I think
I
the
appreciate
attitude
that, sir.
for spreading goodness around and sharing and helping. Not many people have that attitude. I think it's
I
amazing.
appreciate it, and I very much appreciate the time today and getting the ability to tell my story and getting to know you better as well.
Well, hopefully we'll have more podcasts.
Let's do it.
Okay, cool. Cheers.